All right, folks, welcome back. This is the PM session review for the index futures markets, even the S&P on the left, NASDAQ on the right. Obviously, this is, again, a continuing amplification of the free ICT mentorship on YouTube for 2022. This is just for your review, obviously, and you're welcome to add any annotations and observations in your charts as well. Do not use simply mine, otherwise you're missing the point of the exercise and review. All right, so take a look at what we have here. Pause the video, study it and see what you see. All right, I'm going to unpause the video now. All right, so we had a big down day today that went straight from an opening gap on Sunday. No attempt to fill the gap prior to taking out the daily low. And if you don't know what I'm referring to, look at the AM session for the same date of this review. This is the PM session, so there's two sessions in the stock indices that we're reviewing with this model, AM session and PM session, morning and afternoon. The New York session, we already covered this morning, but the lunch hour, notice what happened. We went all the way back up to the old daily low. That's what that 38.0750 level is. Go back and look at your daily chart and you'll see what it is. Back above 9:30 opening price. We broke back down. Now notice what we're doing. On lunch, we're taking out the morning high right here. What did I teach you? If we're going to have continuation on the downside, it's going to run for what? Buy side. During or just after lunch. Well, we're returning back to an old daily low, and we're taking out a short-term high from the morning. So when it breaks back down, we have a shift in market structure here. You can use that as your fair value gap, or this is the one I see. You can obviously pick the one that's more comfortable for you. This run here, back above 9:30 a.m., it's occurring after 1:30 in the afternoon, New York local time. The market breaks below that short-term low here. We have a fair value gap. That's the first one. And the second one here, the rules I teach you, try to get your fill, look at the bodies of the candles. See that? Staying inside that fair value gap. But reaching as far as, and this is why I teach you to expect it to possibly reprice here, but your stop would be here. And the market targets sell side liquidity here, and it does so handsomely into the 4 o'clock close. Off the lows it goes. NASDAQ, very similar. Run morning high in lunch hour. Back to the old daily low that we just traded through. Broke down, right back up into a fair value gap. If you're using this swing here, I'm electing to use this low to this high. It breaks that short-term low here, retraces back to the first fair value gap. You can expect a possible run and reprice to here, but it doesn't do so on NASDAQ, and breaks lower. Your stop would be here. It runs for sell side liquidity into the 4 o'clock New York session close, and then off the lows, creating a nice little run for the PM session. Again, these are incomplete unless you look at both the sessions, AM and PM, and it's just for your edification and also to help you with back testing and journaling. Until next time, wish you good luck and good trading.